Hello, everybody, and welcome back to my daily market analysis and insights. Today's going to be an interesting day. We're going to be talking about Jerome Powell's speech and the impacts that will have and has had on the markets yesterday and moving forward. We're also going to be talking about CPI data. We covered it a bit yesterday. We want to cover it a little bit more today, and we want to go into gold, the 10-year Treasury, and the impact of the 10-year Treasury. Gold, I think, is providing a new opportunity for you guys like gold fanatics to buy into it. And finally, I'll do my technical analysis later on in the video of all the markets and where I see the zones and positions and levels to enter, to exit, and where price could potentially go in the next few days and weeks. Okay, so without wasting any time, I want to go straight into sharing my screen and discussing a heat map of the S&P 500 yesterday. So as you can see here, Apple did well, 1% up on the day. Disney was the one that did exceptionally well on earnings. Okay, some positive earnings with Disney, exceptional move here. This move, some of my group members captured this move and traded it up. So they did exceptionally well here. It was moving higher going into earnings and then 6% on earnings as well. Tesla, slightly down. This is one of the trades I'm still long in, but I'm looking for a more long-term move post-November, post-December, as I've discussed in the other videos in the last few days. Overall, a red day, and as expected, a slight dip in the market. Going into the other data, what I wanted to go into is market sentiment, okay? I always look at market sentiment because it helps me gauge where everybody else is in terms of the markets. As you can see here, since the election, the market's moved to bullish, 49.8%, 21% is in neutral, and 28% is bearish. So overall, very bullish here, and I think we can get some neutrality or a move sideways in the markets in the short term before we get further upside in the next 6 months, as projected by the sentiment vote here. Now, one of the things I look at when I look at sentiment is the spread between the bulls and the bears. When I look at the spread here, I'm usually looking for the level above 25%. So when there's a spread between the bulls and the bears by 25%, I think at the moment we might be around 20%. When we goes above 21%, we then see a slight dip and correction in the market. So in reality, if we do get a slight dip here in the S&P 500 to 5,900 or 5,800, we're probably going to get an upward move, and then it becomes a situation where we get this huge spread as the market leads too far into being bullish, and then we get a bit of a sell-off. Okay. Now, the other thing I look at is the VIX. I mentioned it yesterday that the VIX is looking quite low here. It's probably going to bounce off this level. It did a bit yesterday, and if we want that dip to 5,700, 5,800 on the S&P 500, we probably need this to spike up a little bit to around 16, 17, okay? And it's looking likely that it might do in the next few days, okay? Yesterday was maybe a trigger post Jerome Powell's speech, and that's what I want to go into right now. So with Jerome Powell, he says that the US economy is solid. It's showing signs that it's strong, and I don't disagree with him on some aspects. However, there are some worrying signs in the jobs market and a few other parts of the economy. When it comes down to CPI data, inflation, when it comes down to consumer spending, is still very good. It's looking strong, and that's something I'm going to cover later on in this video. So he's basically cooled down the hope that we're going to get another interest rate cut in December. So that is something that I'm cautious about and a bit worried about, because I've mentioned that I am looking at small caps as a potential move in the markets, and interest rates are one of the factors why I thought they were going to be a good investment. However, it's not the only factor. We saw regional financial stocks in the US doing really well after Trump's election and on these interest rate cuts. in October and November. Now they might be cooling off a little bit, and those were the reason why the Russell 2000 moved well in the last few weeks. Okay, so that's something to be mindful of. I am watching the situation very carefully here to see where we stand and where we go with interest rates. Okay, so going into other aspects that I want to cover today, I want to go into gold, okay? And I'm going to quickly put this on full screen here. One of the things that I'm looking at in gold is the average, the deviation of price from the moving averages. And the indicator at the bottom here shows that in the past year, so February, we saw it, June, July, and potentially now, we saw it 3 times previously that when price deviates away from moving averages, key moving averages, we then get a buy up. Okay, so we've seen it here before, and then we saw buy ups on multiple occasions, and now we have deviated again, and then we potentially see a buy up here. I personally think that we can get something like this happening. I think we're not going to get a buy up similar to February, June, and July, but we will get a buy up probably similar to what I've drawn here on this chart. I think the RSI probably will become a little bit oversold as well, and we might get a move higher, a resistance here, move down further low, a bit higher, come back down low, retest this area, and then move higher into 2025. That's something that I'm looking at very carefully, and then we can go probably to around 3K on gold. And that's something that I covered yesterday. I mentioned that, the last 4 days, I mentioned that I am short on gold until 2.5K, and I think that's a level that is realistic. And, we are already at 2.56, so we're around $64 away from that 2.5K level, 2.4. And if we get that level, and as you can see here, this was a level that was retested. I'll cover this a bit later on the technical analysis section, but this is something I'm looking at the moment on gold, okay? And that's the data that's covering this. Now, this is a good opportunity, and I also mentioned I want to cover 10-year treasuries. So with 10-year treasuries, I wanted to discuss the 10-year treasuries versus S&P 500 earnings yield. In 2023, we saw that treasuries did better than S&P 500 earnings yields, and we're seeing that uptick again with those treasuries moving higher. I think we are due a correction here where we get a drop in treasuries, and then the S&P 500 does better, as it has done historically for the last 23 years prior to 2023. Okay, so this is an unusual situation. It does happen. It has happened previously in 95, 96. It has happened again around 99, and then around 2003 or 4, around this area here, post.com bubble. So that's something that we should watch out for. But it's showing that potentially we would get an upward move in S&P 500 and then selling off in 10-year treasuries. Okay, so moving on to where the market is. Like I said, I'm being very cautious with the market at the moment, especially considering that I think we're following the trajectory of the 1970s here. So if you look at the blue line, the red line is the 1970s in terms of CPI data, inflation, and we've seen the similar move here. What happened in the 70s was there was a reduced inflation, became reduced to a level around 2%, and then increased, consolidated for a little bit, and then we saw a spike up. And when we're looking at Trump's policies, which are going to be involving deportations and tariffs, there are discussions that this will be inflationary for the market. And I think regardless of who was going to come into the US government, we were probably going to get a lot of money printing as well, and that is inflationary. So Trump is going to print money and spend aggressively, He's also going to increase tariffs. He's also going to deport, and the consequences of that will be inflationary for the US. Obviously, we will have to watch the space carefully here and see how the market reacts. But it looks like in 2025 we can get high inflation, and I know that when there's high inflation, there is a good move upwards in the market, especially in the S&P 500. Okay, so that's something to be mindful of, and I am watching this area very carefully. Okay. Now, going into valuations, I've mentioned a number of times in the last few days that the S&P 500 is essentially above the 25-year average, which is around 16. It is around 22. And I mentioned it also that the small caps and medium caps are on par with the average, which is around 16. Now, if we remove the mega caps, if we remove the 8 largest companies like Nvidia, Apple, etc., this PE ratio comes back down to around 18. So the valuations are probably around 18. So I don't think it's too bad overall for the S&P 500. And then, I still think, although small caps might struggle with interest rates not being reduced and cut, maybe there might be issues with inflation going higher and potentially they might not do well. I do think that in the short term, let's say 3 to 6 months, medium term, we're probably going to get the small caps catching up on valuations because they just need to. Okay? Because they just need to. Eventually, they will have to be in line with the rest of the market. Okay, and I've discussed this extensively in the previous video, so I don't want to focus too much on it today. You can go and watch yesterday's video and all the videos from Monday, 9th of November, up until the 14th of November. I discussed this in detail. Okay. So although I am a little bit worried about small caps, we do usually see a 40% move in the Russell 2000 post-election. And I am very bullish here again on the Russell 2000. I do think that we're going to get this move regardless of what happens with interest rates and so on. I think the impact of Trump coming in, earnings are doing pretty well as well for these smaller caps. So we should be getting this move higher. And again, I've mentioned in previous videos that if we do select our stocks properly, the Russell 2000 can make 40%. We can make probably a couple 100% during this period for the next 6 months to a year. I think it's probably a 1 year period here where we're going to get this 40% move in the Russell 2000. Okay, and yesterday and a couple of days before, I mentioned Warren Buffett is selling a lot of his stocks and he's holding a lot of cash. I think it's around 25-30% of his assets under management are cash now, the highest they've been since the 2007-2008 crash. However, we have to take it with a pinch of salt, and we have to also consider his time horizon. We have to look at him and his style. He is a value investor. He's a long-term investor. We shouldn't base our decisions on his decision making. It could be maybe a year or 2 years before we get that fall in the market. And if we look at here, we look at the Bank of America chart. He sold Bank of America over here, again here, and we saw that price still moved higher when he was selling. Now, he does have a lot of funds under management, so he's obviously going to come out of positions at a slower pace and he needs liquidity. So, you could say that, the stock price moved higher, but you can also say that he's just being smart about his exiting at the right time as prices moving higher in this market. So again, look at time horizon. As a trader, I look more in terms of where we can go long term, and then I position myself in shorter term positions to take advantage of moves in the market as money cycles between sectors, industries, and so on. So again, where are we in the market cycle? We are, in my opinion, around 2/3 in this market cycle. We had the dip in 2020, 2022, as we do in all our other market cycles. And then now we are on the second and third leg of the cycle, and we're probably following this 1970, 1960 trajectory in the market, and the average, I think, and the average of the market's cycles that we've seen previously. Okay, so that's me covering a broad analysis of the markets. And now I want to go into technical analysis. And we're going to S&P 500 straight away. So the S&P 500, we saw yesterday a dip, and I've been anticipating this. If you go and watch the previous videos, you'll see that I've been anticipating a dip to around 5.8, 5.7, probably around 5.8K, 5.9K, okay? And I wanted to add here that around this 5.9, 5.5, 5.95 area, we have a lot of calls and puts expiring. So I think we can drag this. It's probably going to be dragged out for an extended period of time for the next month or so, well, until the end of the month. And also, I think we can get the dip that I mentioned in my previous videos before the big move in the market. So around the 21st of November is when we get the final dips. So that's the thing that you should be mindful of. Watch very carefully the markets here, and I do expect a slight dip to at least 5.88 or 5.8K. Okay, so that's something to watch. Russell 2000 are seeing a bit of a dip in the Russell 2000 in the last few days. This moves more aggressively. It is in line with what I expected. I do think we can get a retest around this 2,300 before we get that measured move for 38 to 40% over the next 12 months. Okay. The VIX, I mentioned that the VIX is going higher. Again, it's higher today as well. Yesterday, a slight move higher. Today, again, slightly higher. So personally, I expect it to go to around 17. It can go as high as 19. That will produce the dip in the S&P 500. Let's go into crypto. Okay, crypto is one of the sectors and industries that I'm watching very carefully here. I'm still expecting a dip, but at the moment, what I'm seeing based on today's price action is a consolidation. So either we're going to get a dip or a consolidation. It needs one of the two. We get the dip, okay? Ideally, we get the dip all the way down to around 80, but we get a huge buy up in Bitcoin. Bitcoin not necessarily produce a dip, but we might get that in other altcoins and other opportunities in the markets a little bit more aggressively than Bitcoin, as they area to buy short term may get resistance above here, come back down again, and then we get the final move high. Okay, ideally we have 3,000 retest here. We might slightly deeper retest around 2,900 for 5, and then we get the momentum moving higher. Just we could get consolidation here as well. Every day this changes, and I'll provide analysis here every day anyway. Aggressively, this is because it moves in line with Bitcoin, and Bitcoin's been doing well today as well. Fine. This one that I think can do really well on this dip because I think and down extensively here. So you guys can watch and trade. I am watching this one for a trade, and I want to buy here on the breakout of 4.1, maybe a little bit higher, to make this 80% move to that Fibonacci 50% retracement area. Okay, Matic, very, very similar with Matic here. This is one of the trades I'm looking at personally as well. I want Matic at this after this dip, so I'm watching very carefully where the market will find support. Very similar, very good setup here on this dip buy. And Cardano have moved a strong move in the markets. In terms of opportunities, I already gave you some opportunities there. If you want opportunities in crypto, you can go and join my Telegram group, complete for free, and get my analysis. It comes as well as my screens. Stocks. Straight into commodities. I want to discuss gold, and I want to see where gold is at the moment. I think gold is being brought up a little bit. And the action that I'm predicting is so 2,500 area, which was a retest of this previous area of consolidation. I think we can get a retest here, come back down, that I was predicting means that we get a retest of the key areas, which is a key area consolidation here. And one of the things with gold is central banks have been buying it. That's the reason why it's moved up higher. And I think central banks will probably want to buy around the 2,500 area again when it becomes cheaper and it looks good again. And then also it's deviated extensively from the moving averages, which I covered earlier in this video. Still being bought up a little bit here. Very, very similar setup here with silver. Come back on, I think. Area, move up higher. It could easily just shoot up. I just see it. And here, trades do I do see this going down 4.1%, maybe even lower, because it's just been completely on a move higher here. And I think it's due a correction. That's 10-year treasuries. I want to go into US dollar. You're showing weakness here. It's a good opportunity probably to trade and go long, Japanese yen, etc., etc. So there's some weakness here on the US dollar. It wasn't what I was thinking at, which is around 107. I put this around this area, but it can be a zone of this resistance area, so it's probably a zone around here. That's something that I've been watching. We should probably get good moves in. The German market recently, and I think we are due here after the head and shoulder. Here, consolidation of some sort, a head and shoulder as well. I think we can dip similar to France in during its election in May, where we had a huge dip. And I think France again is showing more weakness here, the French index. The UK FTSE 100 finding some support here. And I was expecting a deeper dip on S&P, the FTSE 100, but it's never 100%. We could see this as the final support. I just don't see it. I think we have to get the RSI a little bit lower. That's my opinion. I get caught out. Now, oil again on this trend line. I think this can move higher. We're finding some consolidation here. I personally was looking at 60, 65 here on oil before we get the move higher. Okay, so that I am watching very carefully. We covered natural gas. As natural gas dip in here, probably a good time to get out and not be in a trade. That's for shorting natural gas stocks like VST, nickel, around this area, and I'm looking for that trade to move higher here for 50% move. And the copper, finding support, I think, around this area. It's a zone, good zone here to buy copper. And I'm worried about the RSI. I'm worried about the momentum. I would like to see it show some momentum above the EMAs there at 4.2, and then we can probably get a move for about 11% on copper. Okay, so I think that's it for today. I think I've covered most of this. I've also covered cacao recently, and look at this trade's been doing really well here. Previous video, you'll see that I mentioned cacao. It's been really well. Go and check it out. It could get a dip and then move a little bit higher in the next few days and weeks. So probably next week. So that's it for me for today. It is Friday and I won't be doing analysis tomorrow, but I will be doing a weekly overview of the markets on Sunday where I share my screens and what I'm looking for in the coming week and also the opportunities I'll be trading in the market. So make sure you subscribe. Make sure you also follow me on Instagram and TikTok where I share bite-sized videos on my insights. I have a Telegram group where I with my community. There's around 2 members at the moment. We talk about trades and ideas there every single day. And I'm fairly active on that community. So if you have any questions, you can go to me there and we can have a discussion about any idea opportunity that you are looking at in the market. Okay, see you next week.